Hi everyone and welcome back to my channel. Today, as you can see, our topic of discussion is accounting equation. Well, when we start our journey of accounting in class 11, we come across right in the beginning the concept of double entry system. Now, based on the double entry system, we have the dual aspect concept which says that every debit has an equivalent credit. And based on that concept, we have the accounting equation, which tells us that the total assets of an organization will always be equal to the total liabilities. Now, if we further deduce this equation, we can also say that the liabilities are of two types. Either it is for the owner, who is basically involved in the running of the organization, as we can say the internal people, and the second are the outsiders, whom we refer to as the outside liabilities. So this equation, assets is equal to liabilities, can be deduced as assets is equal to owner's equity or owner's liability plus outside liabilities. This owner's equity has a special name and we call that as capital. Hence, we can further deduce this equation as assets is equal to capital plus liabilities. And this is how usually we identify our accounting equation. Well, let's try to understand whether it really is true for all transactions or not. Let's take a few examples here. The first example tells you Sham started business with cash of rupees 20,000. Now, we can understand here that Sham is the owner of the business who is investing money in order to start the business. So, we can write here the cash that is being received by the organization as rupees 20,000, and equivalent to that we have the capital input of Sham, who is an liability to be paid. Of course, it's a special liability as capital, but nevertheless, it's a liability. So, on the other side of the equation, under capital, we write 20,000. And hence, we see that the equation is balanced. Second, we see purchased goods from Heather, rupees 5,000. Now, since the word cash is not mentioned, we'll have to assume that this is a credit transaction. We purchased goods from Heather on credit, which means no cash was paid. Now, since no cash was paid, our cash remains the same as 20,000. But since we purchased goods, that would lead to an increase in our stock. And hence, we put stock over here as rupees 5,000. Now, since these goods were bought from Heather on credit, Heather becomes a liability. We call them as creditors. So, Heather is our creditor now. And beside capital, we need to write Heather as rupees 5,000 because that is an outside liability. Again, we see that the equation does tally. 20,000 plus 5,000 is 25,000. And on the other side of the equation also, we have 20,000 plus 5,000 as 25,000. Thirdly, we have sold goods to Andrew costing rupees 1,800 for rupees 2,000. Now again, the word cash is not mentioned here, which means that we sold these goods to Andrew on credit. But the catch here is that the goods were worth rupees 1,800, but we sold it to Andrew for rupees 2,000. So what do we do with this additional 200 rupees? Let's have a look. Cash remains the same as 20,000 because here there was no cash transaction. Andrew did not pay us any money. So cash remains the same. Our stock of goods is reduced because the goods worth rupees 1,800 were given to Andrew. So we reduce 1,800 from our stock because that was the value of the goods that we sold. So 5,000 minus 1,800 gives us 3,200. But Andrew did not pay us. He's supposed to pay us. Now if someone who's supposed to pay us but has not paid yet, what do we call him? A debtor. So Andrew is a debtor now, and since we sold it to him worth rupees 2,000, we are supposed to receive rupees 2,000 from Andrew. So, since he is our debtor, under assets, we write Andrew as rupees 2,000. Now, on the capital and the liability side, we see that since this 200 rupees, the one which we had a query about, what to do with this? This 200 rupees is the additional money that we are getting, and this we refer to as profit. This profit belongs to the owner because the owner has invested capital in the business. Hence, this 200 rupees gets added to the capital and it becomes 20,200. Well, for Heather, it remains the same as 5,000. We are supposed to pay him later on, so there's no change over there. Now let's total again. 20,000 plus 3,200 makes it 23,200, and another 2,000 makes it 25,200. Well, that's the asset side. Let's have a look at the capital and the liability side. This is 20,200 plus 5,000, making it 25,200 again. So, as we can see, for all the three examples and for any other accounting transaction that take place, we will always see that the asset side is equal to the capital and the liability side, or as we can say, the assets is equal to total liabilities. Hope this video was of value to you and it made sense to you. And if you did like this video, do share it with your friends. Thank you so much for watching.